Hey traders, this is Blake Morrow. You are listening to the week ahead video for August 29, 2021. I hope you guys and gals are having a great weekend. If you're in the UK, I hope you're enjoying a very long weekend as you guys have a bank holiday on Monday. We have a lot to talk about, especially last week we had the Fed Chairman Powell give his speech at the Jackson Hole Symposium. It confirmed the hesitation that we had in the dollar. The dollar closed at its lows for the week. But we have jobs reports that are coming up this next week, which I think are going to be really big for the structure of the dollar. And I'm going to spend a lot of time talking about that. But before I do so, I need to mention, if you haven't tried out ForexAnalytix, you should. It's only $1 for 10 days. With your $1 for the next 10 days, you're going to get the premium version of ForexAnalytix. You get to try it all. You get to try the chat room. You get to try the app. You get to try the live webinars that we do, not only the free ones, the F.A.C.E webinar that we do for everybody, but also the Morning Edge, the European crossover, all of the ones that we specially do for the Forex Analytics community. Plus you get the mobile app. You get notifications when analysis comes out. You get to look at the advanced analysis like the harmonic patterns, the Elliott wave setups. So make sure you try it out. And even if you decide to go to the light version after you're done, that's only $19 a month. You still get the mobile app. You still get to listen to all of the webinars that we do. And you should try it out. It's only $1 for 10 days. All right, we're going to talk about the dollar and what happened this last week. So if you recall last week, at the end of last week, during the week ahead video, we were in breakout territory, but we closed at the breakout point. We closed literally at 93.40. And last week ahead video, I said, well, this is the market saying I'm not totally convinced that the Fed Chairman Powell is going to give us a hawkish, speech. And if you were listening throughout the course of this week, and you were listening to the webinars we were doing and conducting for the Forex Analytics community, we said, what incentive does the Fed chairman have to deliver a hawkish, speech? We hoped he would to create some volatility. And personally, I'd been betting on the dollar, but that was not a guarantee. And with the jobs report coming up this next week, with COVID still spiking in a lot of parts here in the US and around the world, it made sense for him to be dovish and say, we're gonna be data dependent, and that's what we got. And the dollar actually continued its reversal, and now the bullish structure for the dollar is a little bit at risk. So let's talk about that for a moment. If you look at the dollar, and I'm gonna let me get rid of this trend line. I'm gonna do a little bit of drawing for you guys. If you look at this previous move, so from the low in May to the highs that we set in July, we only retraced, you'll notice here, we retraced a 38% of that entire move. That left us with the risk of a bullish continuation, which we got. We got that bullish continuation. We hit a new all-time, we hit a new high for 2021 briefly, but we hit a new high, as you would expect with such a shallow retracement. Now, the risk is, with this week, it's data dependent. The Fed chairman told us tapering, the amount of tapering is basically, it's going to be data dependent from here. So on Friday of this next week, we have the jobs report coming out. The market's looking for 750,000 jobs, roughly, okay? My assumption is between now or early in the week, and between now and Friday, the dollar will probably continue to correct lower. But where we go from here, actually I should have just kept this circle. Where we go from here is going to be dependent on what kind of data we get. Now, the reason why I say this bullish structure is now at risk, because what you'll see we are creating higher highs, and at this point higher lows, as long as we do not break below 91.75. We break below 91.75, and that will confirm that this was a false breakout and the dollar is probably going to, come back down towards the 200-day moving average, maybe even lower than that. But I don't know if we can bet on weak data, because the U.S. economy has been very resilient, and for the lack of better terms, it's just pretty strong. So we have to see good, strong jobs, payroll numbers, unemployment numbers continue to dip. And if we do, that would build the case that the dollar will continue to rally. But a weak number could signal a bigger, broader reversal for the dollar. And so let's talk about what currencies would really set up in that type of situation. So first and foremost, I want to take you over to a currency pair that I traded this last week and I lost money. Okay. And that's the US dollar Norwegian krona. Now, if you recall, the free webinars that we do, and if you listen in every day, you know that I've been playing the US dollar Norwegian krona on the long side for quite some time. And I played this big cup and handle. I've been playing it. I played it on the breakout. I played it on the dip when we dipped back towards 870. And last week, I went into last week long, and I took a loss at the end of the week. Now, technically, what you see here is you see a big double top. So the reason why I point all this out is because if the data that we get on next week on Friday, if that data is weak, there's a risk that the US dollar Norwegian krona continues to sell off and maybe trades back down towards the 8.35 level, towards the 78% retracement. That, I feel, is a risk with weak US data. We have a double top and it'll play out lower. Is that possible? Heck yeah, it's possible. But let's talk about strong data. Let's say the economic data is strong. Well, you guys might know that I've been playing the Aussie dollar on the short side pretty much all of 2021. We had this big head and shoulder pattern, turned into a wedge, shorted it on a breakdown. It's been underperforming, throughout the course of this year. It's been underperforming. Risk assets moving higher, copper moving higher, Aussie has not been following. So it's been, easier to play it on the short side most of this year. And I still think the Aussie has an opportunity to get down towards 70 cents. Last week, we stopped at 71 cents, and that has been the low thus far. Now, this may be the low. That might be the level that, boy, I wish we all bought the Aussie dollar at 71 cents. If the economic data is weak in the US next week, that should help propel the Aussie dollar higher towards 74 cents and maybe even beyond that. But if the economic data is strong, and let's say in the US we create 800,000 jobs, let's say we even create 1 million jobs, let's say unemployment drops to 5.2% from 5.4%. If that happens, there is a risk that the Aussie continues its trend lower towards the 70 cent level. This is a big support level that I'm hoping we see. I don't, I've been looking at this chart hoping we'd get there, but now I'm a little scared that we're not going to see it. But again, this is all data dependent. So I'm going into this next week pretty open-minded with the dollar. I don't have any dollar exposure right now. And I think I'm gonna have a much better idea how to play the dollar as this week progresses. Now, let me stop there for a second and mention, guys, if you haven't registered for our free webinar that we do every day, it's called the F.A.C.E webinar. You can go to the Forex Analytics website. You can click on this link. It says register now to attend for free. Myself, the rest of the team, we come on, we talk about how we're feeling about the markets that day. We go over some of the major currency pairs. I kind of give you a heads up on what I'm looking at. So make sure you tune in. It's free. Anybody can attend. Because if you're only listening to the week ahead videos from Sunday to Sunday, a lot can change throughout the course of the week. And there's data points that come in, like this next week, we're going to have ADP data. We're going to have ISM manufacturing data, I believe, on Wednesday. We're going to have we're going to have consumer confidence, Chicago PMI. At the end of the week, we're going to get ISM services data. We're going to get, did I say ADP? We're going to get, private payrolls data on Wednesday. There's a lot of things that could influence how I feel about the dollar throughout the course of the week, and same with my team. So make sure you're at least listening into that. All right, now going back to what I was talking about regarding the dollar, I'm going to approach the dollar with a pretty neutral stance, and I think what happens following this next week will set the pace for the dollar going into the beginning or the new trading season, if you will, after summer break and everybody comes back. Now, I also want to talk about the S&P. The S&P is in an ascending wedge, and the ascending wedge is basically bullish until, and let me remove some of these drawings here. It's really bullish until you break below this lower trend line. That lower trend line at this stage in the game comes in roughly around 4,400. Roughly around 4,400. While we're above 4,400 in the S&P, there's no reason to be bearish. There are warnings that the S&P could reverse divergent relative strength, but I guess we could argue that all of 2021 relative strength has really been divergent. Has that stopped the stock market from going higher? No, it hasn't. So keep that in mind, right? There's a lot of warning signs saying that the stock market might reverse, but until we see that break of 4,400, we have to continue to believe that the S&P will at least reach the upper end of the wedge, which is at 45.50, and could accelerate even higher than that. So we're in an ascending wedge, but the market is bullish until we break below that lower trend line. And I think the S&P, you have to imagine stocks are really going to enjoy continued data that is not impressive. So if we miss the employment data, if the Chicago PMI numbers are weaker, if the ADP jobs report comes in underwhelming, that's just going to continue to bolster the stock market as participants believe that the Fed will push back tapering, continue to push back the idea of tapering. And even if they do taper, the dollar amounts are going to be less than what the market expects. So if we have strong data, that might be the catalyst that actually drives the stock market lower. But until then, you have to imagine the stock market still looks pretty strong. I also want to bring your attention the gold market. So gold closed above some pretty key levels this week. And we closed at the highs of the week. We closed above the 200-day moving average. You can see it right here. Came in around 1810 roughly. We closed above the 200-day moving average. That spike low that was that very illiquid spike low also might have created a longer term double bottom. And so if you see a break above this resistance that we put in back in July, that comes in around 1830, you could probably see a continued move higher in the gold market. That would complement a weaker US dollar. But gold looks strong. The dollar looks pretty defensive, and it's on its back foot right now, and stocks continue to remain strong. And remember, we're going into the last pretty illiquid week of the year before most Europeans come back from holiday. And remember, in the US next weekend, it's going to be a long weekend with the Labor Day holiday. So less people in the markets, but they're all going to start coming back over the next couple of weeks, which is going to give us some better liquidity. But for right now, you guys got to be a little bit defensive. It's okay to be neutral and kind of wait for the data to come out before you react. But guys and gals, if you like this video, please give us a thumbs up. This is like give you guys some information. This is like my 11th take of recording this video this weekend. That's how many times I've actually messed up. It usually doesn't happen that way, but it is. So if you like this video and you're like, hey, good job, Blake, please give me a thumbs up. I really enjoy it. And make sure you subscribe to our channel so you don't miss any of our great analysis throughout the course of the week and all the great interviews that Dale Pinkert does. I know next week, I think we have Luke Groman coming in. That's going to be a cool interview. So guys and gals, thank you so much for joining me today. I hope you guys and gals have a great remainder of your weekend, My name is Blake Morrow. Thanks for listening in.